Hello everyone, welcome to the Ichimoku four-hourly analysis for the S&P 500 for Tuesday, March 1st, 2011. Well, a very bearish start to the day today, and we can see that all of the bullishness that we've seen in this market over the previous few days and the breakout or the trading up above the cloud where we found support down around the top of the cloud a few days ago has evaporated, and the market was trending up in a first time frame uptrend with green body candles. Today, in that first 4 hours of trading, the market was really blown away with a very, very bearish candle. Now, in Ichimoku charts terms, in Japanese candlestick terms, that's a reversal pattern. It's a bearish engulfing pattern, and that's where the body of the current candle, which is bearish, engulfs the body of the previous candle and engulfed it in a very big way. This candle actually took out the previous 4 hour sessions of trading and traded into the previous third session of 4 hours as well, substantially into it. So a very, very bearish candle. The market then in the final 4 hours of trading actually followed through with continued bearishness and took out some potential support areas from lower time frames, and actually just held at the top of the cloud, which is very interesting that the market previously found support at the cloud here. But when it tested that area at the top of the cloud, we did see the buyers come in here today as the market traded right to the top of the cloud. The market closed with the bears in control. So it'll be a very interesting day tomorrow in that first 4 hourly session to see whether the market can find support around those areas. Now we have a zone of potential support here around this 1309 down to 1306, 1305 area. We can see here previously that the market found resistance there. So we might be looking for support roughly around this area. And we had highlighted this large area previously as an area of potential support for the market, and we did see the market find support within this region, and that was the bottom of the region that we highlighted. So we could see the market find support anywhere within there. Now if the market does trade low, it will be trading within the cloud, so that is a natural area of support, and it will be trading down towards the bottom of the cloud, which is around 1295, 1294. So we should see some support coming in around those areas. Now, if the market does bounce, then we do have obviously resistance up around 1325 and then around their swing high to 1333. But quite a bearish market today. Just watch the low of the current candle for any potential test at lower levels. Well, we'll now continue on with the analysis of the hourly charts, and we can see here that as we saw with the 4 hourly charts, those two very bearish red candles, that the market was bearish for almost the entire day. We can see this candle here at in the first hour of trading where the market attempted to rally outside of the cloud, and we were looking for a bullish candle to give us a buy signal. That's the thing with Ichimoku. Even though a break outside the cloud to the top of the cloud is bullish, we really do need to be a little bit more clever about that. And when we have, we'd like to see a bullish candle, and that could offer a greater probability of the market appreciating. But when we have this type of indecisive candle, it certainly is a warning that all is not healthy with the trend, and that's exactly what's happened here. This spinning top candle represents indecision in the market, and then we did eventually in the next hour of trading have a change of trend to the downside. The market traded down within the cloud, and the market did actually find support in the cloud. We can see this long shadow on the bottom of this candle, and the market was able to still close outside the top of the cloud, although the trend had changed. So it shows how powerful the cloud can be. The third hour of trading, however, was very bearish, a very big red-bodied candle, and closed just at or just outside the bottom of the cloud. So we did have that bearish break. The market then failed to go on with it with a bearish candle. We had an indecisive type candle that traded outside and then was trading at the bottom of the cloud, closed at the bottom of the cloud. But the final 3 hours of trading were fairly bearish candles as the market tested support down around 1312 at this line that was marked previously, and then in the second last hour of trading tested the support within this highlighted area of fairly strong resistance that we thought would offer itself over the previous few days of trading. Final hour of trading, the bears have closed in control of this market by closing down at the lows, and they've shown some commitment to taking this market lower. So there is a good chance that the market will be testing lower levels in the early hours of trading for tomorrow. We do, however, need to watch the high of the current candle for any potential change of trend, but more likely that the trend will continue down. If the market does trend to the upside, then obviously this previous area of support, minor support at 1312, and then certainly at the cloud will offer itself as strong resistance, which is extending between roughly 1314 up to about 1322. So as the market moves on, though, that resistance will change because of the dynamics of the cloud will change, and it will become a little bit thicker, and then slightly thinner, but it still will be fairly thick. So it means that the market will need to do a good bit of work and have a good bit of upside momentum to break out above that area. To the downside, however, we should look to the market finding support anywhere within this region, and the region extends down to roughly 1294. We can see here previously the market found support at a swing low here, tried to rally outside and failed, and then found support at the bottom of that level. So that's the area that we'll be looking to over the next day or so. The low of the final candle there was 1306, so that's a very important area for the market when we begin trading in the morning.